When you file your tax return, one of the most important decisions you'll make is choosing your filing status. Your filing status is more than just a checkbox on your tax form. It directly impacts how much you owe or how much you'll get back as a refund. There are three main filing statuses we'll explore today: single, married, and head of household. Each status comes with its own set of tax brackets, deduction amounts, and eligibility requirements for various tax credits. Understanding these differences can help you maximize your tax savings and ensure you're filing correctly. Your filing status is a classification that determines several critical aspects of your tax return. First, it affects which tax brackets apply to your income. Different filing statuses have different income thresholds for each tax rate. Second, it changes your standard deduction amount, which is the portion of your income that isn't subject to tax. Third, it impacts your eligibility for various tax credits, such as the Earned Income Tax Credit or education credits. Finally, your filing status is based on your marital status and family situation as of December 31st of the tax year. Even if you get married on the last day of the year, you're considered married for the entire year. The single filing status is the most straightforward option. You qualify for this status if you are unmarried, divorced, or legally separated according to your state law on the last day of the tax year. This means if your divorce was finalized on December 31st, you would file as single for that entire year. The single status has its own set of tax brackets and a standard deduction designed for individual taxpayers who don't have dependents qualifying them for head of household status. While the tax rates for single filers are higher than some other statuses, it's the correct choice if you don't meet the requirements for any other filing status. Married filing jointly is often the most beneficial status for married couples. When you file jointly, you and your spouse combine all your income, deductions, and credits on one tax return. This status offers the highest standard deduction of all filing statuses, which means more of your income is protected from taxation. Additionally, the tax brackets for married filing jointly are more favorable, meaning you'll often pay less in taxes compared to filing separately. Both spouses are jointly responsible for the accuracy of the return and any taxes owed. This status is generally recommended for most married couples because of its tax advantages. Married filing separately is an option where each spouse files their own individual tax return. While this keeps your finances separate, it comes with significant trade-offs. The standard deduction for this status is much lower than filing jointly, which means less of your income is shielded from taxes. Additionally, many tax credits and deductions are either reduced or completely unavailable when you file separately. However, there are specific situations where this status makes sense. For example, if one spouse has significant medical expenses or miscellaneous deductions, filing separately might allow that spouse to claim more deductions. It's also used when spouses prefer to keep their tax liabilities separate or in cases of separation or pending divorce. Head of household is a special filing status for unmarried individuals who support a household with dependents. To qualify, you must meet three specific requirements. First, you must be unmarried or considered unmarried on the last day of the tax year. Second, you must pay more than half the cost of keeping up a home for the year. This includes expenses like rent, mortgage, utilities, and food. Third, you must have a qualifying dependent who lives with you for more than half the year. This could be your child, parent, or another qualifying relative. The key advantage of this status is that it provides better tax treatment than filing as single. Filing as head of household comes with significant tax benefits compared to the single filing status. The tax brackets are more favorable, meaning you'll pay a lower tax rate on the same amount of income compared to filing as single. For example, the income thresholds for each tax bracket are higher, so more of your income is taxed at lower rates. Additionally, the standard deduction for head of household is substantially larger than the single status, which further reduces your taxable income. These benefits recognize the financial responsibility of supporting a household and dependents. If you qualify for this status, it's important to claim it because it can result in significant tax savings compared to filing as single. When it comes to choosing your filing status, remember that your situation on December 31st determines your status for the entire year. This is why year-end planning is so important for major life events like marriage or divorce. Take time to review all available filing status options to find the one that provides the most tax benefit for your situation. Consider both the tax rates that apply to each status and the standard deduction amounts. Sometimes the difference between statuses can save you thousands of dollars. If your situation is complex, such as having dependents, going through a divorce, or supporting elderly parents, it's wise to consult with a tax professional. They can help you navigate the rules and ensure you're choosing the filing status that minimizes your tax liability while staying compliant with tax laws.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.